Josh Lipton's got the numbers. Josh.
Well, NVIDIA reporting Q1 results here, $3.66 versus expectations of $3.28. Revenue, $5.66 billion. The street was closer to $5.4 billion. Turning their Q2 guidance, they're looking for about $6.3 billion in their forecast. That's versus an expectation of $5.5 billion. Turning to segments, $2.76 billion for gaming. That's versus an expectation of $2.71 billion. And data center, $2.05 billion. The street was closer to $2 billion. Remember, heading into this print, the stock was up about 15% over the past 3 months. It was up about 20% so far this year. Back to you all.
Down 1.3% after hours. Josh, thanks. This week, as part of our Summer Unmasked series, we're speaking with top executives across a number of industries to discuss how their companies are preparing for the economy to reopen. Today, we're joined by Danny Meyer, CEO of Union Square Hospitality Group. He was also recently appointed chairman of the Economic Development Corporation of New York City. Welcome back to the show, Danny. Good to see you.
It's great to be here, and since you're calling this unmasked, I'm going to get my vaccination and do what they say and take off my mask.
Very
it's
good.
Good to see you.
Take your point. So what's going on with your business? How far along are you to getting all the restaurants opened and having them come back as far as the business and the diners?
We're about halfway there right now, which is a great point. So, in fact, the only ones that are not open right now are restaurants that happen to be in larger type of situations like art museums, a couple of hotels, a big skyscraper that are taking a little bit longer. But all the other ones are back right now, and there is absolutely no shortage of demand for New Yorkers to go out. The vaccination has been probably the greatest thing that's ever happened for our industry, both for the people who work for us and, of course, for our guests.
It is amazing to see, especially since we've gotten such good weather here in New York. Danny, but what about shortages among workers? How has it been trying to bring back all of those workers that you had to lay off at a very fast speed here as demand ramps up?
Yeah, nobody can hire back all of their workers, even if they wanted to, because many of our workers left the city. They left the city by edict when there was quarantine and or they couldn't afford to live in the city without a means by which to pay the rent. And then there's this whole other thing, which is that everybody's hiring at the exact same time. And so it's going to take, in my judgment, at least 2 or 3 months for supply and demand to kind of keep up with each other and to hit an equilibrium. But I do think there's going to be some really good drivers. The one thing that's helping us right now in a bizarre way is that since office buildings are still nowhere nearly occupied to the critical mass that they were and that they one day will be again, that means that lunch business is pretty much off the table. So when you're staffing a restaurant, the good news, if you can call it good news, is that you're only staffing primarily for one of the 2 shifts. Now, on the other side of the coin, one of the positive outcomes of the period of time during which we had COVID was that in our city and in many cities around the United States, outdoor dining has become a permanent part of the landscape. That's fantastic for city life. It's fantastic for public safety. It's fun. And it's also great because it means that there are more seats in a restaurant. So the other thing that I'm really looking forward to is that when Broadway comes back to New York City and the theaters and the concerts and all of the kind of public opportunities for artists to come together, that's also an amazing pool of restaurant workers. And when those people have a real reason to come back to New York City, it's also going to be a great boon for the population of restaurant talent.
Danny, we've talked about outdoor dining and how it's brought a sort of European feel, perhaps, to New York City and how great that's been and prospects for it being allowed to stay permanently. How might that work? And will it lead to you as a restaurateur having to lease the indoors from the property owner and the outdoors from the city? How might those negotiations work if it is going to be a bit more permanent?
Well, the indoor is already spoken for. We've already done that negotiation with our landlord. The city has been fantastic so far at understanding that the restaurant industry is crucial to the comeback of the city. And I really, really hope that the city will not say, oh, and here's our opportunity for a pound of flesh while we're at it, because that'll be counterproductive to the entire comeback. And whatever voice I can have in that, I promise to use it.
So as far as the reopening is concerned, and kind of, on the sad front, Danny, there are a lot of empty storefronts all over New York. A lot of restaurants didn't make it and shops didn't make it. What are you doing as part of the council to address that and get some new blood in there?
Nothing at this point, Sarah. I wish we could. As a matter of fact, a couple of those storefronts used to be our restaurants. We lost our original Blue Smoke and our jazz club, Jazz Standard. And I think that one of the things that I'm hopeful that the city could do would be to bring together at the table some type of package which induces landlords, rather than sitting on vacant space, which is what they often do while they wait for the economy to come back, because they don't want to lock themselves into a deal that could be, a 10 or 20 years of a mistake because they sold at a low. I would love to see some inducement for them to come to the table whereby if they get started with a new tenant in some type of a percentage rent basis, whereby when the tide goes up, everybody wins, but then that the deal that they would have struck can be enacted once the city is back at full strength. And once cities across the country have office occupancy, tourism, business travel, all actually residential density, which is still not where it was when New York first went into COVID. So landlords on their own may not be incentivized to do this. So hopefully the city can be a helpful partner in bringing the two together.
More broadly on the staff question, Danny, do you feel like some workers have decided to leave the hospitality industry for good or semi-permanently, and they've tried other things? They've perhaps been entrepreneurial during the crisis because they were forced to be so, or is it just a temporary thing and you expect as we get into the fall, everyone will come back that was in the industry before?
Yeah, that's a great question. I think it's a little bit of both. I think that many people who were laid off took work instead in businesses that were actually doing quite well during COVID. I know for a fact that we actually had a jobs board for the people at Union Square Hospitality Group, and we worked with like-minded companies. Some of them went to go work in grocery stores. Some of them went to work as drivers. Some of them went to work for e-commerce platforms. Some of them went to work at big box stores that were open. And they may have very, very good jobs right now, and they may or may not come back to our industry. We'll have to see. But I also think that this industry has been a fantastic employer across the entire country for many years. And I think that this industry is as serious as possible about trying to come up with new ways of looking at compensation that are going to make us incredibly attractive for the next generation as well.
Danny Meyer, it's good to see you. Thank you for unmasking with us for our summer series. We appreciate it.
Thank you.
And tomorrow on our Summer Unmasked series, we're going to talk amusement parks with the CEO of Cedar Fair, ticker FUN. That stock up 17% year to date, though off its highs of the year. CEO Richard Zimmerman joins us tomorrow. Wilfred, I grew up with Kings Island, and they're an owner of that. Cedar Point, they have a bunch of Ohio theme parks as well. That'll be a fun one. We are getting some more earnings, though, to tell you about. American Eagle, Williams-Sonoma, both out. Courtney Reagan with the results. Courtney.
Yeah, I was a big fan of Kings Island too, Sarah. All right, let's start with American Eagle. First quarter earnings coming in 2 cents above analyst estimates. Revenue also slightly stronger than expected. They are comparing everything here to the first quarter of 2019, not year over year 2020. So the Air revenue increased 89%, still the standout. American Eagle revenue increased just slightly. The total digital revenue, it looks like, increased 57%. Store revenue overall was flat. The U.S. stores did increase, but they did not give a number. Gross margin did expand like others. They're talking about higher margins due to fuller price sales and lower promotions. And then you can see the shares are bouncing around after hours, but are down about 2%. Let's move on to Williams-Sonoma first quarter. Also a beat on both earnings and revenues, a very strong earnings beat of $2.93 adjusted compared to $1.83 estimated, with the slightly stronger than expected revenues of $1.75 billion. The full year revenue guidance is way above analyst estimates, and the total comps, very impressive, up 40% This is compared to first quarter 2020. And the analysts were looking for that to be up 26%. All of the brands really outstanding, the strongest of which West Elm, up by almost 51%. The weakest of the brands, Pottery Barn Teen and Baby, and that was still up almost 28%. Shares higher by 3%. Back over to you.
Courtney, thank you very much for that. Kings Island sounds good, I have to say.
It was.
Sounds like I missed
They had a
out.
ride called the Beast, which was very scary. Went upside down. I loved it.
The equivalent to me growing up, Polton's Park. Google it. Outskirts of
Never heard of
Romsey in Hampshire. It's not a big one, but it was great. Polton's Park. Still ahead, the CEO of membership platform Patreon, which is making its debut on the CNBC Disruptor 50 list, on when the company could go public. We'll be back in a couple minutes.
Keeping your oyster business growing.
CNBC News Update with Shepard Smith. Hey, Shep.
Hi, Will. Thanks very much. From the news on CNBC, here's what's happening at this hour. Yet again in America, mass murder at a workplace. An employee has opened fire at a San Jose rail yard, killing 8 people today. Police say the 57-year-old shooter killed himself after his attack. The White House says today it is clear the country is suffering from a gun violence epidemic. Speaking of, President Biden asking U.S. intelligence agencies to redouble their efforts to figure out how the COVID-19 pandemic started, giving them 90 days to report back. The president says 2 agencies are leaning toward the theory that human contact with an infected animal started the virus, but one leans toward a laboratory accident. No one in the intelligence community thinks they know enough yet for a firm conclusion. And President Biden acknowledges we may never know for sure exactly what did happen. And Google now has a deal to move a big healthcare company's patient records into the cloud. HCA Healthcare runs 2,000 hospitals across 21 states. Their goal, create digital tools to help monitor patients and guide care decisions. Google reports it does not have access to that data that can be connected to a specific patient at least. Tonight, I'll talk to a medical ethicist about the costs and benefits of getting big tech involved in all of our health care. Your privacy in a digital world on the news right after Jim Cramer, 7 Eastern, CNBC. Sarah, back to you.
That sounds good. Shep, thank you.
All
We
right.
will be there. NVIDIA's earnings call set to kick off in just a few minutes. Up next, an analyst who thinks that stock can rally another 10% from its current level. It's lower a little bit after hours, 0.7%. We'll be right back.
Results under pressure despite beating on both the top and bottom lines. Joining us now, Christopher Rowland, senior analyst at Susquehanna Financial Group. So why are we trading down a little bit here, Chris? Seems like a decent beat.
Yeah, it was a decent beat. It's a little bit of a head scratcher. My guess is an incredibly elevated bar, particularly around data center, and data center might have missed the most optimistic of expectations.
So what's the key to the stock here? We teased that you see another 10% in upsize. Is it the ARM deal, or is it something that you're seeing in these results come to fruition?
Yeah, we're incredibly skeptical on the ARM deal, Sarah. We don't think that's going to ultimately going to happen. We would give it odds of 20% or less. But what's important for investors is, of course, the core gaming market, but that data center number. It's that revenue growth that investors value most heavily. And so we need to see a reacceleration on that side in the data center.
We'll be listening on the call. Christopher Rowland, thanks for your quick take on NVIDIA. A bit lower after hours.
Thank you, guys.
Up next, the future of paid content, subscription service Patreon coming in at number 48 on this year's CNBC Disruptor 50 list as it makes a big push to change the way content creators make money. We will discuss with the co-founder and CEO when Closing Bell comes back.
These days, you have to keep everything moving. And
Is Patreon, a membership platform aiming to make it easier for artists and creators to get paid. The company's total valuation now coming in at $4 billion. And joining us now is Patreon co-founder and CEO Jack Conte. Jack, it's great of you to join us. Just explain a little bit what you're trying to do. I remember there was a lot of press when Joe Budden shifted from Spotify to you for a podcast. So what exactly did you offer him to get him away?
Yeah, we're helping creators run their businesses and make money and do what they do best. Building amazing art for their fans and sharing that on the web. And Patreon is this business platform to basically help creators run subscriptions and membership businesses and get paid for their work.
So what do your subscriber numbers look like right now? How fast are you growing and spreading the word?
Well, the most recent stats that we've announced are we now have over 200,000 creators that are making money on the platform. We're, paying them over $1 billion a year. Their patrons are paying them over $1 billion a year. That's from a little over 7 million paying patrons. And creators have earned about $2 billion cumulatively through the platform. So yeah, it's been an amazing time the last few years to watch the web really shift away from this kind of creators ought to be working for free. Creators ought to be giving their content away for free. And I think now people are starting to realize, oh, these are real businesses and creators ought to be making money like everybody else.
And Jack, I mean, I guess there's obviously ways that people can cut out the so-called middleman that exists already, like, for example, YouTube. But your point is that stealthily or whatever, YouTube takes a much bigger cut than say, you will.
Sure, I think YouTube is a great product for creators to find audience, but ultimately YouTube is building for advertisers. That's their customer. That's who's paying YouTube. And for us, our customers, creators. We're building for creative people. We're building the business infrastructure to allow those creators to run their businesses. CRM, CMS, payments, tax calculation, everything that a creator needs to be a viable, sustainable, profitable company. We're helping creators with that underlying business infrastructure, as opposed to just, say, audience development, which there are plenty of platforms for. YouTube is great at that. Facebook is great at helping creators find audience. We're hyper-focused on providing that business infrastructure to allow creators to be successful in growing and running their businesses.
So who is the biggest competitor? Is it a Spotify?
I think a lot of the distribution platforms now are also starting to wake up to this. People are starting to see that that creators, have a lot of earnings potential. And so all the distribution platforms, whether it's Spotify or YouTube or Twitter, or Facebook, they're all building ways now for creators to earn subscription revenue from their fans and actually beyond, to just earn money from their fans. And this is awesome. This is such a great time to be a creative person. Creators have incredible leverage now that they haven't had for many years, because these platforms were sort of focused on just driving content production instead of getting creators paid. Now I think the shift that we're really starting to see is these platforms are realizing that creators need to get paid too. And so they're starting to build payment tools. Ultimately, our competitive advantage is that we are the most creator-first company on the planet. Our customer is creators, not advertisers. And I think creators feel that and see that, and it makes a difference in everything that we do and build.
Is there a risk when people join your platform, or more broadly go behind, I guess, a paywall, that they become less relevant?
Well, we actually don't expect creators to shift their audience growth onto Patreon. That's the beautiful thing about running a membership business, is that you can still continue your content production efforts on all these other sites, on YouTube, on Spotify. You can keep, pushing content to the web and finding new fans with the stuff that you make. What we find creators doing on Patreon is offering alternate business models, extra content, behind the scenes content, an extra 30 minutes of the podcast where they do a deeper dive into an interview with a guest, some extra photos that they don't want to publish on Instagram because, the creator's opening up and sharing a little bit more about themselves than they would on a mass media platform. So we're seeing creators build these wonderful freemium businesses, and it's just incredible to see the innovation that creators are bringing to their memberships. But yeah, the beautiful thing is you don't have to shift onto a different platform. Patreon plays nice with the rest of the web, and that's one of the reasons that I think we see so many creators coming to Patreon to run their business.
Jack, really interesting. Thanks so much for joining us. We appreciate it.
Thank you.
And don't miss, by the way, more CNBC Disruptor 50 coverage. That continues tomorrow across CNBC. Retailers Williams-Sonoma and American Eagle both beating earnings expectations, but the stocks heading in opposite directions. We'll break down those moves when closing bell comes back. NVIDIA nearly break even again.
CNBC Disruptor 50.
My name is Sanidra, and I will be your conference operator today. At this time, I would like to welcome everyone to the NVIDIA's Financial Results Conference Call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question-and-answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press the pound key. Thank you. Simona Jankowski, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the first quarter of fiscal 2022. With me on the call today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the second quarter of fiscal 2022. The content of today's call is NVIDIA's property. It can be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, May 26, 2021, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Simona. Q1 was exceptionally strong, with revenue of $5.66 billion and year-on-year growth accelerating to 84%. We set a record in total revenue in gaming, data center, and professional visualization, driven by our best ever product lineups and structural tailwinds across our businesses. Starting with gaming, revenue of $2.8 billion was up 11% sequentially and up 106% from a year earlier. This is the third consecutive quarter of accelerating year-on-year growth, beginning with the fall launch of our GeForce RTX 30 series GPUs. Based on the Ampere GPU architecture, the 30 series has been our most successful launch ever, driving incredible demand and setting records for both desktop and laptop GPU sales. Channel inventories are still lean, and we expect to remain supply constrained into the second half of the year. With our Ampere GPU architecture now ramping across the stack in both desktop and laptops, we expect the RTX upgrade cycle to kick into high gear as the vast majority of our GPU installed base needs to upgrade. Laptops continue to drive strong growth this quarter as we started ramping the Ampere GPU architecture across our lineup. Earlier this month, all major PC OEMs launched GeForce RTX 30 series laptops based on the 3080, 3070, and 3060 as part of their spring refresh. In addition, mainstream versions based on the 3050 and 3050 Ti will be available this summer, just in time for back to school, starting at price points as low as $799. This is the largest ever wave of GeForce gaming laptops, over 140 in total, as OEMs address the rising demand from gamers, creators, and students for NVIDIA's powered laptops. The RTX 30 series delivers our biggest generational leap in performance ever. It also features our second generation ray tracing technology and frame rate boosting, AI-powered DLSS. The RTX is a reset for graphics with over 60 accelerated games. This quarter, we added many more, including Call of Duty, Modern Warfare, Crysis Remastered, and Outriders. We also announced that DLSS is now available in Unreal Engine 4 and soon in the Unity game engine, enabling game developers to accelerate frame rates with minimal effort. The RTX 30 series also offers NVIDIA Reflex, a new technology that reduces system latency. Reflex is emerging as a must-have feature for esports gamers who play competitive titles like Call of Duty Warzone, Fortnite, Valorant, and Apex Legends. We estimate that about 75% of GeForce gamers play esports games, and 99% of esports pros compete on GeForce. We believe gaming also benefited from crypto mining demand, although it's hard to determine to what extent. We've taken actions to optimize GeForce GPUs for gamers while separately addressing mining demand with cryptocurrency mining processors, or CMPs. Last week, we announced that newly manufactured GeForce RTX 3080, RTX 3070, and RTX 3060 Ti graphic cards will have their Ethereum mining capabilities reduced by half and carry a low hash rate, or LHR, identifier. Along with the updated RTX 3060, this should allow our partners to get more GeForce cards into the hands of gamers at better prices. To help address mining demand, CMP products launched this quarter, optimized for mining performance and efficiency. Because they don't meet the specifications required of a GeForce GPU, they don't impact the supply of GeForce GPUs to gamers. CMP revenue was $155 million in Q1, reported as part of the OEM and other category, and our Q2 outlook assumes CMP sales of $400 million. Our GeForce Now cloud gaming platform passed 10 million registered numbers this quarter. GFN offers nearly 1,000 PC games from over 300 publishers, more than any other cloud gaming service, including 80 of the most popular free-to-game play games. GFN expands the reach of GeForce to billions of underpowered Windows PCs, Macs, Chromebooks, Android devices, iPhones, and iPads. GFN is offered in over 70 countries, with our latest expansions including Australia, Singapore, and South America. Moving to ProViz. Q1 revenue was $372 million, up 21% both sequentially and year-on-year. Strong notebook growth was driven by a new sleek and powerful RTX-powered mobile workstations with Max-Q technology, and the enterprises continue to support remote workforce initiatives. Desktop workstations rebounded as enterprise resumed the spending that has been deferred during the lockdown, with continued growth likely as offices open. Key verticals driving Q1 demand include manufacturing, healthcare, automotive, and media and entertainment. At GTC, we announced the coming general availability of NVIDIA Omniverse Enterprise, the world's first technology platform that enables global 3D design teams to collaborate in real time in a shared space, working across multiple software speeds. This incredible technology builds on NVIDIA's entire body of work and is supported by a large, rapidly growing ecosystem. Early adopters include sophisticated design teams at some of the world's leading companies, such as BMW Group, Foster & Partners, and WPP. Over 400 companies have been evaluating Omniverse, and nearly 17,000 users have downloaded the open beta. Omniverse is offered as a software subscription on a per-user and a per-server basis. As the world becomes more digital, virtual, and collaborative, we see a significant revenue opportunity for Omniverse. We also announced powerful new Ampere architecture GPUs for next-generation desktop and laptop workstation. The new RTX-powered workstations will be available from all major OEMs. Moving to automotive. Q1 revenue was $154 million, up 6% sequentially and down 1% year-on-year. Growth in AI cockpit revenue was partially offset by the expected decline in legacy infotainment revenue. We extended our technology leadership with the announcement of the next generation NVIDIA Drive Atlan SoC. Atlan will deliver an unrivaled 1,000 trillion operations per second of performance and integrate data center class NVIDIA Bluefield networking and security technologies to enhance vehicle performance and safety, making it a true data center on wheels. Atlan, which targets automakers' 2025 models, will follow the NVIDIA Drive Orin SoC, which delivers 254 TOPS that has been selected by leading vehicle makers for production timelines starting next year. The NVIDIA Drive platform has achieved global adoption across the transportation industry. Our automotive design win pipeline now exceeds $8 billion through fiscal 2027. Most recently, Volvo Cars announced that it will use NVIDIA Drive Orin, building on our next great momentum with some of the largest automakers, including Mercedes-Benz, SAIC, and Hyundai Motor Group. In robotaxis, we added GM Cruise to the growing number of companies adopting the NVIDIA Drive platform, which includes Amazon Zoox and Didi. We've also had a great traction with new energy vehicle makers. Our latest wins include Faraday Future, R Auto, IM Motors, and VinFast, which join previously announced wins with SAIC, NIO, XPeng, and Li Auto. In trucking, Navistar is partnered with TuSimple in selecting NVIDIA Drive for autonomous driving, joining previously announced Volvo Autonomous Solutions and Plus. NVIDIA is helping to revolutionize the transportation industry. Our full stack, software-defined AV and AI cockpit platform spans silicon, systems, software, and AI data center infrastructure, enabling over-the-air upgrades to enhance safety and the joy of driving throughout the vehicle's lifetime. Starting with our lead partner, Mercedes-Benz, NVIDIA Drive can transform the automotive industry with amazing technologies delivered through new software and services business models. Moving to data center. Revenue topped $2 billion for the first time, growing 8% sequentially and up 79% from the year-ago quarter, which did not include Mellanox. Hyperscale customers led our growth this quarter as they built infrastructure to commercialize AI in their services. In addition, cloud providers have adopted the A100 to support growing demand for AI from enterprises, startups, and research organizations. Customers are deploying NVIDIA's A100 and DGX platforms to train deep neural networks with rising computational intensity, led by two of the fastest growing areas of AI, natural language understanding and deep recommendators. In March, Google Cloud Platform announced general availability of the A100, with early customers including Square for its cache application and Alphabet's DeepMind. The A100 is deployed across all major hyperscale and cloud service providers globally, and we see strengthening demand in the coming quarters. Every industry is becoming a technology industry and accelerating investments in AI infrastructure, both through the cloud and on-premise. Our vertical industries grew both sequentially and year-on-year, led by consumer internet companies. For example, Naver, a leading internet technology company in Korea and Japan, is training giant AI language models at scale on DGX SuperPod to pioneer new services across e-commerce, search, entertainment, and payment applications. We continue to gain traction in inference with hyperscale and vertical industry customers across a broadening portfolio of GPUs. We had record shipments of GPUs used for inference. Inference growth is driving not just the T4, which was up strongly in the quarter, but also the universal A100 Tensor Core GPU, as well as the new Ampere architecture-based A10 and A30 GPUs, all excellent at training as well as inferencing. Customers are increasingly migrating from CPUs to GPUs for AI inference for two chief reasons. First, GPUs can better keep up with the exponential growth in the size and the complexity of deep neural networks and respond with the required low latency. In April's MLPerf AI inference benchmark, NVIDIA achieved the top results across every category, spanning computer vision, medical imaging, recommender systems, speech recognition, and natural language processing. And second, NVIDIA's full-stack inference platform, including Triton, the inference server software, simplifies the complexity of deploying AI applications by supporting models from all major frameworks and optimizing for different query types, including batch, real-time, and streaming. Triton is supported by several partners in the cloud services, including Amazon, Google, Microsoft, and Tencent. Examples of how customers use NVIDIA's inference platform include Microsoft for grammar checking in Office, the United States Postal Service for real-time package analytics, T-Mobile for customer service, Pinterest for image search, and GE Healthcare for heart disease detection. We also had strong results with Mellanox networking products. Like our compute business, strong growth was driven by hyperscale customers across both Ethernet and InfiniBand. We achieved key design wins and proof of concept trials for the NVIDIA BlueField 2 DPU with cloud service providers and consumer internet companies. We also unveiled BlueField 3, the first DPU built for AI and accelerated computing, with support from VMware, NetApp, Splunk, Cloudflare, and others. BlueField 3 is the industry's first 400 gig DPU and delivers the equivalent data center services of up to 300 CPU cores. It transforms traditional server infrastructure into zero trust environments in which every user is authenticated by offloading and isolating data center services from business applications. With BlueField 3, our DPU roadmap will deliver an unrivaled 100x performance increase over a 3-year period. As we look back at the first full year since closing the Mellanox acquisition, we are extremely pleased with how the business has performed. It has not only exceeded our financial projections, but it has been instrumental in key new platforms like the DGX SuperPod and the BlueField DPU, enabling our data center scale computing strategy. In April, we held our largest ever GPU technology conference with more than 200,000 registrants from 195 countries. Jensen's keynote had over 14 million views. At GTC, we announced our first data center CPU, NVIDIA Grace, targeted at processing massive next-generation AI models with trillions of parameters. The ARM-based processor will enable 10x the performance and energy efficiency of today's fastest servers. With Grace, NVIDIA has a 3-chip strategy with GPU, DPU, and now CPU. The Swiss National Supercomputing Center and the U.S. Department of Energy's Los Alamos National Laboratory are the first to announce plans to build Grace-powered supercomputers. Grace will be available in early 2023. GTC is first and foremost for developers. We announced NVIDIA developed and optimized pre-trained model availability on the NVIDIA GPU Cloud Registry. Developers can choose a pre-trained model and adapt it to fit their specific needs using NVIDIA Tau, our transfer learning software. Tau fine-tunes the model with customers' own small data set to give models a custom fit without the cost, time, and massive data sets required to train a neural network from scratch. Once a model is optimized and ready for deployment, users can integrate it with an NVIDIA application framework that fits their use. For example, the NVIDIA Jarvis framework for interactive conversational AI is now generally available and used by customers such as T-Mobile and Snap. And the NVIDIA Merlin framework for deep recommendators is in open beta with customers such as Snap and Tencent. With the chosen application framework, users can launch NVIDIA Fleet Command software to deploy and manage the AI application across a variety of NVIDIA GPU-powered devices. For enterprise customers, we unveiled a new enterprise-grade software offering available as a perpetual license or subscription. NVIDIA AI Enterprise is a comprehensive suite of AI software that speeds development and deployment of AI workloads and simplifies management of enterprise AI infrastructure. Through our partnership with VMware, hundreds of thousands of vSphere customers will be able to purchase NVIDIA AI Enterprise with the same familiar pricing model that IT managers use to procure VMware infrastructure software. We also made several announcements at GCC about accelerating the delivery of both NVIDIA AI and accelerated computing to enterprises and edge users among the world's largest industries. Leading server OEMs launched NVIDIA certified systems, which are industry standard servers based on the NVIDIA EGX platform. They run NVIDIA AI Enterprise software and are supported by the NVIDIA A30 and A10 GPUs. Initial customers including Lockheed Martin and Mass General Brigham. In addition, we announced the NVIDIA AI on 5G platform supported on NVIDIA EGX servers to enable high-performance 5G RAM and AI applications. The AI on 5G platform leverages the NVIDIA Aerial software and the NVIDIA BlueField-2 A100 converged card, which combines our GPUs and DPUs. We are teaming with Fujitsu, Google Cloud, Manuvir, Radisys, and Wind River in developing solutions based on our AI on 5G platform to speed the creation of smart cities and factories, advanced hospitals, and intelligent stores. Another highlight at GTC was the announcement of a broad range of initiatives to strengthen the ARM ecosystem across cloud data centers, HPC, enterprise and edge, and PCs. In the cloud, we are bringing together AWS Graviton2 processors and NVIDIA GPUs to provide a range of benefits, including lower cost support for richer game streaming experiences, and greater performance for ARM-based workloads. In HPC, we are bringing together an Ampere Ultra CPU with NVIDIA GPUs, DPUs, and NVIDIA HPC software developer kit. Initial supercomputing centers deploying it include Oak Ridge and Los Alamos National Labs. In the enterprise and edge, we are bringing together Marvell ARM-based Octeon processors and the NVIDIA GPUs to accelerate video analytics and cybersecurity solutions. And in PCs, we are bringing together MediaTek's ARM-based processors with NVIDIA's RTX GPUs to enable realistic ray trace graphics and cutting-edge AI in a new class of ARM-based laptops. On our ARM acquisition, we are making steady progress in working with the regulators across key regions. We remain on track to close the transaction within our original timeframe of early 2022. ARM's IP is widely used, but the company needs a partner that can help it achieve new heights. NVIDIA is uniquely positioned to enhance ARM's capabilities, and we are committed to invest in developing the ARM ecosystem, enhancing R&D, adding IP, and turbocharging its development to grow into new markets in the data center, IoT, and embedded devices, areas where it only has a light footprint or in some cases, none at all. Moving to the rest of the P&L. GAAP gross margin for the first quarter was down 100 basis points from a year earlier and up 100 basis points sequentially. Non-GAAP gross margin was up 40 basis points from a year earlier and up 70 basis points sequentially. The sequential non-GAAP increase was largely driven by a more favorable mix within data center and the addition of CMP products. Q1 GAAP EPS was 3.03, up 106% from a year earlier. Non-GAAP EPS was 3.66, up 103% from a year ago. Q1 cash flow from operations was $1.9 billion. Let me turn to the outlook for the second quarter of fiscal 2022. We expect broad-based sequential year-on-year revenue growth in all of our market platforms. Our outlook includes $400 million in CMP. Aside from CMP, the sequential revenue increase in our Q2 outlook is driven largely by data center and gaming. In data center, we expect sequential growth in both compute and networking. In gaming, with the move to low hash rate GeForce GPUs and increasing the amount of CMP products, we are making a significant effort to serve miners with CMPs and provide more GeForce cards to gamers. If there is additional CMP demand, we have supply flexibility to support it. We believe these actions, combined with strong gaming demand, will drive an increase in our core gaming business for Q2. Now, to look at our outlook for Q2. Revenue is expected to be $6.3 billion, plus or minus 2%. GAAP and non-GAAP gross margins are expected to be 64.6% and 66.5%, respectively, plus or minus 50 basis points. GAAP and non-GAAP operating expenses are expected to be approximately $1.76 billion and $1.26 billion, respectively. GAAP and non-GAAP other income and expenses are both expected to be an expense of approximately $50 million. GAAP and non-GAAP tax rates are both expected to be 10%, plus or minus 1%, excluding discrete items. Capital expenditures are expected to be approximately $300 million to $325 million. Further financial details are included in the CFO commentary and other information available on our IR website. In closing, let me highlight that Jeff Fisher and Manuvir Das will keynote Computex on the evening of May 31st U.S. time, as well as several upcoming events for the financial community. We'll be virtually attending the Evercore TMT conference on June 7th, the BofA 2021 Global Technology Conference on June 9th, and the NASDAQ Virtual Investor Conference on June 16th. Our earnings call to discuss our second quarter results is scheduled for Wednesday, August 18th. With now, we will open the call for questions. Operator, would you please poll for questions?
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. And your first question comes from Timothy Arcuri with UBS.
Thanks a lot. Colette, I was wondering if you can double-click a little more on the guidance. I know of the 6 to 650 in growth, you said 250 is coming from CMP, and both gaming and data center will be up. Can we assume that they're up about equally, so you're getting about 200 roughly from each of those? And I guess second part of that is, within data center, I'm wondering, can you speak to the networking piece? It sounds like maybe it was up a bit more modestly than it's been up the past few quarters. I'm just wondering what the outlook is there. Thanks.
Yeah, thanks so much for the question on our guidance. So I first want to start off with, we see demand really across all of our markets, all of our different market platforms. We do plan to grow sequentially. You are correct that we are expecting an increase in our CMP. And outside of our CMP growth, we expect the lion's share of our growth to come from our data center and gaming. In our data center business, right now our product lineup couldn't be better. We have a strong overall portfolio, both for deliberate effort on the gaming perspective to supply to our gamers the cards that they would like, given the strong demand that we see. So that we do see it growth sequentially coming from data center and gaming, both contributing quite well to our growth.
Thanks a lot, Colette.
Didn't answer your second question. My apologies. On Mellanox. Additionally, Mellanox is an important part of our data center. It is quite integrated with our overall products. We did continue to see growth this last quarter, and we are also expecting them to sequentially grow as we move into Q2. They are a smaller part of our overall data center business, but again, we do expect them to grow.
And your next question comes from C.J. Muse with Evercore ISI.
Yeah, good afternoon. Thank you for taking the question. In your prepared remarks, I think I heard you talk about a vision for acceleration in data center as we go through the year. And as you think about the purchase obligations that you reported up 45% year on year, how much of that is related to long lead time data center, and how should we interpret that in terms of what kind of ramp we could see in the second half, particularly as you think about perhaps adding more growth from enterprise on top of what was hyperscale-driven growth in the April quarter? Thank you.
So let me take the first part of your question regarding our purchasing of inventory. And what we're seeing in just both our purchase commitments and our inventory. The market has definitely changed to where long lead times are required to build out our data center products. So we're on a steady stream to both commit longer term so that we can make sure that we can serve our customers with the great lineup of products that we have. So yes, a good part of those purchase commitments is really about those long lead times of the components to create the full systems. I'll turn the second part of the question over to Jensen.
What was the second part of the question, Colette?
The second part of the question was, what do we see in the second half as it relates to the lineup of enterprise? And we articulated in our pre-remarks regarding that we see an acceleration. Thank you.
Yeah, we're seeing strength across the board in data centers, and we're seeing strengthening demand. CJ, our data center, as you know, accelerates a range of applications, from scientific computing, both physical and life sciences, data analytics and classical machine learning, cloud computing and cloud graphics, which is becoming more important because of remote work, and very importantly, AI, both for training as well as inferencing, for classical machine learning models like XGBoost, all the way to deep learning based models like conversational AI, natural language understanding, recommender systems, and so on. And so we have a large suite of applications, and our NVIDIA AI and NVIDIA HPC SDKs accelerate these applications in data centers. They run on systems that range from HGX for the hyperscalers to DGX for on-prem to EGX for enterprise and edge, all the way out
out to AGX autonomous systems. And this quarter at GTC, we announced one of our largest initiatives, and it's taken us several years. You've seen me working on it, in open, out in the open, over the course of the last several years. And it's called EGX, is our enterprise AI platform. We're democratizing AI. We're bringing it out of the cloud. We're bringing it to enterprises, and we're bringing it out to the edge. And the reason for that is because the vast majority of the world's automation that has to be done has data that has data sovereignty issues or data rate issues that can't move to the cloud easily. And so we have to move the computing to their premise, and oftentimes all the way out to the edge. The platform has to be secure, has to be confidential, it has to be remotely manageable, and of course it has to be high performance, and it has to be cloud native. It has to be built like the cloud, the modern way of building cloud data centers. And so these stacks has to be modern on the one hand, it has to be integrated into classical enterprise systems on the other hand, which is the reason why we've worked so closely with VMware and accelerated VMware's operating system, data center operating system, and software-defined data center stacks on Bluefield. Meanwhile, we ported NVIDIA AI, NVIDIA HPC onto VMware so that they could run distributed, large-scale, accelerated computing for the very first time. And that partnership was announced at VMworld. It was announced at GTC, and we're in the process of going to market with all of our enterprise partners. They're OEMs, they're value-added resellers, they're they're solution integrators all over the world. And so this is a really large endeavor, and the early indications of it are really exciting. And the reason for that is because, as you know, our data center business is more than 50% vertical industry enterprise already. It's more than 50% vertical industry enterprises already, and by creating this easy to adapt and easy to integrate stack, it's going to allow them to move a lot faster. And so this is the next major wave of AI. This is a very exciting part of our initiative, and it's something that I've been working on we've been working on for quite a long time. And so I'm delighted with the launch this quarter at GTC. The rest of the data center is doing great too. As Colette mentioned, hyperscale demand is strengthening. We're seeing that for computing and networking. You know that the world's cloud data centers are moving to deep learning because every small percentage that they get out of predictive inference drives billions and billions of dollars of economics for them. And so the movement towards deep learning shifts the data center workload away from CPUs because accelerators are so important. And so hyperscale, we're seeing great traction and great demand. And then lastly, supercomputing centers all over the world are building out, and we're really in a great position there to fuse for the very first time simulation-based approaches as well as data-driven based approaches, what is called artificial intelligence. And so across the board, our data center is gaining momentum, and we just see great strength right now, and it's growing strength, and we're really set up for years of growth in the data center. This is the largest segment of computing, as you know, and this segment of computing is going to continue to grow for some time to come.
And your next question comes from Aaron Rakers with Wells Fargo.
Yeah, thanks for taking the question. Congratulations on the results. I'm going to try to slip in two of them here. First of all, Colette, I think in the past you talked about how much of your gaming installed base is kind of on the pre-ray tracing platforms or really kind of context behind the upgrade cycle that's still in front of us. That's kind of question one. And then on the heels of the last question, I'm just curious, things like VMware's Project Monterey, as we think about the Bluefield 2 product and Bluefield 3, how should we think about those starting to become, or when should they become really material incremental revenue growth contributors for the company? Thank you.
So yeah, we have definitely discussed in terms of the great opportunity that we have in front of us of folks moving to our ray traced GPUs, and we're in the early stages of that. We've had a strong cycle already, but still we probably have approximately 15% moving up a little bit from that at this time. So it's a great opportunity for us to continue to upgrade a good part of that install base, not only just with our desktop GPUs, but the RTX laptops are also a great driver of growth and upgrading folks to RTX.
Colette, you want me to take the second one?
Yes, please.
Yeah, Aaron, a great question on Bluefield. First of all, the modern data center has to be re-architected for several reasons. There are several fundamental reasons that makes it very, very clear that the architecture has to change. The first is that it's cloud native, which means that a data center is shared for everybody. It's multi-tenant. You don't know who's coming and going, and it's exposed to everybody on the internet. Number two, you have to assume that it's a zero trust environment because you don't know who's using it. It used to be that we have perimeter security, but those days are gone because it's cloud native, it's remote access, it's multi-tenant, it's public cloud. The infrastructure is used for internal and external applications. So number two has to be zero trust. The third reason is something that started a long time ago, which is software defined in every way, because you don't want a whole bunch of bespoke custom gear inside a data center. You want to operate the data center with software. You want it to be software defined. The software defined data center movement enabled this one pane of glass, a few IT managers orchestrating millions and millions of nodes of computers at one place. And the software runs what used to be storage, networking, security, virtualization, and all of those things have become a lot larger and a lot more intensive. And it's consuming a lot of the data center. In fact, the estimate, depending on how you want to think about it, how much security you want to put on it, if you assume that it's a zero trust data center, probably half of the CPU cores inside that data center is running not applications. And that's kind of strange because you created the data center to run services and applications, which is the only thing that makes money. The other half of the computing is completely soaked up running the software-defined data center just to provide for those applications. And that you could imagine even accepting, if you like, as the cost of doing business. However, it commingles the infrastructure, the security plane, and the application plane, and it exposes the data center to attackers. And so you fundamentally want to change the architecture as a result of that, to offload that software-defined virtualization and the infrastructure operating system, if you will, and the security services, to accelerate it because Moore's law has ended, and moving software that was running on one set of CPUs, which is really, really good already, to another set of CPUs isn't going to make it more effective. Separating it doesn't make it more effective. And so you want to offload that and take that application and software and accelerate it using accelerators, a form of accelerated computing. And so that's fun. These things are fundamentally what Bluefield is all about. And we created the processor that allows us to, Bluefield 2 replaces approximately 30 CPU cores. Bluefield 3 replaces approximately 300 CPU cores, just to give you a sense of it, and then Bluefield 4, we're in the process of building already. And so we've got a really aggressive pipeline to do this. Now, how big is this market? The way to think about that is every single networking chip in the world, will be a smart networking chip. It will be a programmable, accelerated infrastructure processor. And that's what the DPU is. It's a data center on a chip. And I believe every single server node will have it. It will replace today's NICs with something like Bluefield. And it will offload about half of the software processing that's consuming data centers today. But most importantly, it will enable this future world where every single packet, every single application is being monitored in real time, all the time, for intrusion. And so how big is that application? How big is that market? Just 25 million servers a year. That's the size of the market. And we know that servers are growing, and so let's give you a feeling for that. And in the future, servers are going to move out to the edge, and all of those edge devices will have something like Bluefield. And then how are we doing? We're doing POCs now with just about every internet company. We're doing really exciting work there. We've included it in high-performance computing so that it's possible for supercomputers in the future to be cloud native, to be zero trust, to be secured, and still be a supercomputer. And then we expect next year to have meaningful, if not significant, revenues contribution from Bluefield. And this is going to be a really large growth market for us. You can tell I'm excited about this, and I put a lot of my energy into it. The company's working really hard on it, and this is a form of accelerated computing that's going to really make a difference.
And your next question comes from Vivek Arya with Bank of America Securities.
Thanks for taking my question. Jensen, is NVIDIA able to ring fence this crypto impact in your CMP product? So even if, let's say, crypto goes away for whatever reason, the decline is a lot more predictable and manageable than what we saw in the 2018-19 cycle. And then kind of part B of that is, how do you think about your core PC gamer demand? Because when we see, these kind of 106% year-on-year growth rate, it brings questions of sustainability. So give us your perspectives on these two topics. Just how does one ring fence kind of the crypto effect, and what do you think about the sustainability of your core PC gamer demand? Thank you.
Sure. Thanks a lot. First of all, it's hard to estimate exactly how much where crypto mining is being done. However, we can only assume that the vast majority of it is contributed by professional miners, especially when the amount of mining increases tremendously like it has. And so we created CMP, and CMP and GeForce are not fungible. You could use GeForce for mining, but you can't use CMP for gaming. CMP yields better, and producing those doesn't take away from the supply of GeForce, and so it protects our GeForce supply for the gamers. And the question that you had is what happens when on the tail end of this? There's several things that we hope, and we learned a lot from the last time, but you never learn enough about this dynamic. What we hope is that the CMPs will satisfy the miners and will stay in mines, in the professional mines. And we're trying to produce a fair amount of them, and we've secured a lot of demand for the CMPs, and we'll fulfill it. And what makes it different this time is several things. One, we're in the beginning of our RTX cycle, whereas Pascal was the last GTX. And not only that, it was at the tail end of the GTX cycle. It was the last GTX, and it was the tail end of the GTX cycle. We're at the very beginning of the RTX 30 cycle. And because we've reinvented computer graphics, we've reset the computer industry. And after 3 years, the entire graphics industry has followed. Every game developer has moved to ray tracing. Every content developer and every content tool has moved to ray tracing. And so if you move to ray tracing, these applications are so much better, and they simply run too slow on GTXs. And so we're seeing a reset of the install base, if you will, and at a time when the gaming market is the largest ever. You know, we've got this incredible install base of GeForce users. We've reinvented computer graphics, and we've reset the install base and created an upgrade opportunity that's really exciting at a time when the gaming industry is really large. And what's really exciting on top of that is that gaming is no longer just gaming. It's infused into sports, esports. It's infused into art. It's infused into social. And so gaming has such a large cultural impact now. It's the largest form of entertainment. And I think that the experience we're going through is going to last a while. And so one, I hope that crypto the CMP will steer our GeForce supply to gamers. We see strong demand, and I expect to see strong demand for quite some time because of the dynamics that I've described. And hopefully, in the combination of those two, we'll see strong growth and through strong growth in our core gaming business through the year.
And your next question comes from John Pitzer with Credit Suisse.
Yeah, good afternoon, guys. Thanks for letting me ask the question. Jensen, I had two hopefully quick questions. First, I harken back to the mantra you guys put out a couple of analyst days ago: the more you spend, the more you save. And you've always been very successful as you brought down the cost of doing something to really drive penetration growth. And so I'm curious, with the NVIDIA enterprise AI software stack, is there a sense that you can give us as how much that brings down the cost of deployment in AI inside the enterprise? And do you think, whether COVID lockdown related or cost related, there's pent up demand that this unlocks? And then my second question is just around government subsidies. A lot of talks out of Washington about subsidizing the chip industry. A lot of that goes towards building fabs domestically. But when I look at AI, I can't think of anything more important to maintain sort of leadership in relative to national security. How do we think about NVIDIA and kind of the impact that these government subsidies might have on either you or your customers or your business trends?
The more you buy, the more you shall save. There's no question about that. And the reason for that is because we're in the business of accelerated computing. We don't accelerate every application. However, for the applications we do accelerate, the acceleration is so dramatic. And because we sell a component, the entire system, the TCO, the TCO of the entire system and all the services and all the people and the infrastructure and the energy costs has been reduced by X factors, sometimes 10 times, sometimes 15 times, sometimes 5 times. And so when we set our minds on accelerating a certain class of applications, and recently we worked on quantum so that we could help the quantum computing industry accelerate their simulators so that they could discover new algorithms and invent future computers. Even though it won't happen until 2030 for the next 20 years, we're going to have 15 years. We're going to have some really, really great work that we can do using NVIDIA GPUs to do quantum simulations. We recently did a lot of work in natural language understanding in computational biology so that we could decode biology and understand how biology is to infer, to understand it, and to predictively improve upon it and design new proteins. Those works are so vital, and and that's what accelerated computing is all about. Our enterprise software, and I really appreciate the question, our enterprise software used to be just about the vGPU, which is virtualizing the GPU inside the VMware environment or inside the Red Hat environment, and makes it possible for multiple users to use one GPU, which is the nature of enterprise virtualization. But now with NVIDIA AI, NVIDIA Omniverse, NVIDIA Fleet Command, whether you're doing collaboration or virtual simulations for robotics and digital twins, designing your factory, or you're doing data analytics, learning what the predictive features are that could create an AI model, predictive model, that you can deploy out at the edge using Fleet Command. We now have an end-to-end suite of software that is consistent with today's enterprise service agreements. It's consistent with today's enterprise business models, and allows us to support customers directly and provide them with the necessary service promises that they expect, because they're trying to build a mission-critical application on top. And more importantly, by creating this, productizing our software, we provide the ability for our large network of partners, OEM partners, value-added resellers, system integrators, solution providers, for this large network of hundreds of thousands of IT sales professionals that we are connected to through our network. We give them a product that they can take to market. And so the distribution channel, the sales channel of VMware, the sales channel of Cloudera, the sales channel of all of our partners in EDA and design, Autodesk, Dassault, so on and so forth. All of these sales channels and all of these partners are now partners in taking our stacks to market. And we have a fully integrated system that are open to the OEMs so that they could create systems that run the stack. And it's all certified, all tested, all benchmarked, and of course, very importantly, all supported. And so this new way of taking our products to market, whereas our cloud business is going to continue to grow, and that part of AI is going to continue to grow. That business is direct. We sell components directly to them. We support them directly. But there are 10 of those customers in the world. For enterprises, there are thousands. Industries far and wide. And so I think we now have a great stack and a great software stack that allows us to take it to the world's market, so that everybody could buy more and save more.
And your final question comes from Stacy Rasgon with Bernstein.
Hi guys, thanks for taking my questions. This is for Colette. So Colette, last quarter you had kind of suggested that Q1 would be the trough for gaming as well as the rest of the company, but gaming in particular, and it would grow sequentially through the year. I guess given the strength we're seeing in the first half, do you still believe that is the case? And I kind of heard you guys, I think, kind of dance around that point a little bit in response to one of the other questions. But could you clarify that? Is that still your belief that core gaming business can grow sequentially through the rest of the year? And I guess same question as well for data center, especially since sounds like hyperscale is now coming back, like after a few quarters of digestion, and then all of the other tailwinds you've talked about. I mean, is there any reason to think the data center itself shouldn't also grow sequentially like through the rest of the year?
Yeah, Stacy, thanks for the question. So I first want to start with when we talked about our Q1 results and when we were looking at Q1, we were really discussing a lot about what we expected between Q4 and Q1. Given what we knew was still high demand for gaming, we believed we would continue to grow between Q4 and Q1, which often we don't. And we absolutely had the strength of overall demand to grow. What that then led was, again, continued growth from Q1 to Q2 as we are working hard to provide more supply for the strong demand that we see. We have talked about that we have additional supply coming. We expect to continue to grow as we move into the second half of the year as well for gaming. Now, we only guide one quarter at a time, but our plan is to take the supply, serve the overall gamers, work on building up the channel. As we know, the channel is quite lean. And so, yes, we do and still expect growth in the second half of the year, particularly when we see the lineup of games, the holiday overall coming, the back to school, all very important cycles for us. And there's a great opportunity to upgrade this RTX installed base. Now, in terms of data center, we'll look in terms of our guidance here. We have growth from Q1 to Q2 planned in our overall guidance. And we do see, as things continue to open up, a time to accelerate in the second half of the year for data center. We have, again, a great lineup of products here. Couldn't be a better lineup now that we've also added the inferencing products and the host of overall applications that are using our software that we have. So this could be an opportunity as well to see that continued growth. We'll work in terms of serving the supply that we need for both of these markets. But yes, we can see definitely growth in the second half of the year.
There are no further questions at this time. CEO Jensen Huang, I'll turn the call back over to you.
Well, thank you. Thank you for joining us today. NVIDIA computing platform is accelerating. Launched at GTC, we are now ramping new platforms and initiatives. There are several that I'll mention. First, enabled by the fusion of NVIDIA RTX, NVIDIA AI, NVIDIA PhysX, we built Omniverse, a platform for virtual collaboration and virtual worlds to enable tens of millions of artists and designers to create together in their own metaverses. Second, we laid the foundation to be a 3-chip data center scale computing company with GPUs, DPUs, and CPUs. Third, AI is the most powerful technology force of our time. We partner with cloud and consumer internet companies to scale out and commercialize AI-powered services. And we're democratizing AI for every enterprise and every industry. With NVIDIA EGX certified systems, the NVIDIA Enterprise AI Suite, pre-trained models for conversational AI, language understanding, recommender systems, and our broad partnerships across the IT industry, we are removing the barriers for every enterprise to access state-of-the-art AI. Fourth, the work of NVIDIA Clara in using AI to revolutionize genomics and biology is deeply impactful for the healthcare industry, and I look forward to telling you a lot more about this in the future. And fifth, the electric, self-driving, and software-defined car is coming. With NVIDIA Drive, we are partnering with the global transportation industry to reinvent the car architecture, reinvent mobility, reinvent driving, and reinvent the business model of the industry. Transportation is going to be one of the world's largest technology industries. From gaming, metaverses, cloud computing, AI, robotics, self-driving cars, genomics, computational biology, NVIDIA is doing important work and innovating in the fastest growing markets today. As you can see, on top of our computing platforms that span PC, HPC, cloud, enterprise to autonomous edge, we've also transformed our business model beyond chips. NVIDIA vGPU, NVIDIA AI Enterprise, NVIDIA Fleet Command, and NVIDIA Omniverse adds enterprise software license and subscription to our business model. And NVIDIA GeForce Now and NVIDIA Drive, with Mercedes-Benz as the lead partner, are end-to-end services on top of that. I want to thank all of the NVIDIA employees and partners for the amazing work you're doing. We look forward to updating you on our progress next quarter. Thank you.
This concludes today's conference call. You may now disconnect.
The insurgent turned insider who nobody knows called Ryan Cohen, a man of great mystery, who's also decided to sell company stock in order to fix the balance sheet, just like Adam Aaron. The Wall Street Bets crowd helped make it happen. Many agreed to lap up that stock that's being offered. And now that the balance sheet can be fixed by that, not that it was all that bad, and all that stock is now placed with the Wall Street Bets people, this thing can boom again, along with them all. GameStop could potentially turn itself around, although we have no idea what it'll turn itself around into. Is it really worth $17 billion? Abstraction. Who cares? Only an idiot asks that kind of question now. It's irrelevant because this isn't investing. This is the ultimate stock fight club. You think I learned this stuff wearing a suit at Goldman Sachs, the two things that make them really hate me? The last time a bunch of hedge funds shorted GameStop, the bulls practically drove them out of business. You'd think it would be a cautionary tale, right? Don't try to short something with such a rabid fan base. Keep your stock. Stay out of the ring. Yet these money managers and individuals keep selling the stock like there's nothing going on here. Like, oh, man, let's offer some stock. Maybe the buyers will take us. Are you out of your minds? Listen to me, sunshine. This thing going higher. What kind of chowderheads offer stock at $225 or $235? It closed up 33 to 242. To a group of buyers who are desperate to drive it. Their price target is 250 or 300. Now, on Wall Street, they have these price targets. Oh, I'm taking my price target up for NVIDIA 700. These guys have real price targets and firepower. I've never seen anything like this. A group of buyers with no sensitivity to price. They'd rather pay $280 than $240. Can you imagine that? Can you imagine going to a store and you say, well, how much is that sweater? And they say $30. Can I pay $50? How much is that? You know, I got this one. Look at this. It's a Ferragamo, right? $180. Hey, you know what? Do you mind if I pay $300 for that? Why not? Okay, now, these people don't have unlimited firepower, but they've got enough firepower to engineer a short squeeze anytime a bunch of professionals decide to bet against this thing. Sellers go away, come back on back. I was trying to do like a Diddy, you know, like that sell in May nonsense that didn't work. Sellers go away, come on back another day when GameStop's at 300. Now, it's not that the bulls know some secret about Ryan Cohen's turnaround plan. They're just committed to buying this thing, and they steamroll the shorts whom they hate and lap up the long stock whom they think are stupid, often much higher than you thought possible. Anyone who tries to fight this move is out of their minds. Just let it go up already. You can register at a higher level. I'm tired of you. Now, there's one thing I don't understand. The meme stock believers only seem to like AMC and GameStop. But now they've got a lot of new capital thanks to these rallies, right? They can train their guns on any number of stocks. I got a couple for them. And just because they may take them just because they hate me and then spite me by saying that I said sell them because they love truth because it's periodically interesting to them. All right, here we go. First, they could open up the howitzers on the people selling Beyond Meat, which has a gigantic 22% short position, even though it's doing some incredible deals with McDonald's just now. How about that China KFC deal? Wowza. Plus, the great reopening will allow CEO Ethan Brown to sell into all the different cafeterias that are back in business. In the meantime, Beyond Meat has lowered prices, improved the taste of its plant-based substitute. I think it'd be very easy for the Wall Street Bets to gun this one, engineer a short squeeze, wipe out the shorts, make a lot of people pay, and then go home and have how about a Wendy's bacon there? Second, Ford. All right, here's a stock that jumped 8.5% today. Ooh, they like that immediately. After CEO Jim Farley announced that he wants to be second to none in electric vehicles here in the U.S. He's throwing down the gauntlet against Elon Musk. More important, if Farley can pull off this transformation, the company will be able to plow even more money into EV, so it's a virtuous circle. He intends to outsell Tesla's new Cybertruck with the electric 5 F-150 truck, now 70,000 reservations. Okay, so maybe it should be 82,300 to keep pace. Well, I don't know, but it's working. Sellers, get out of the way. Here comes the Bronco, the Mustang Mach-E, and the F-150 Lightning, America's most popular truck. Why sell this stock here? Walk away. Let him take it to 15. All right, finally, how about Roblox? Now, I am relentless in this Roblox because it is going higher. When the online gaming company came public via direct list, and the insiders sold very little stock, they're believers. The only real stock for sale is from investors who bought it earlier and now ringing the register, thinking it's a good trade. I think that's nuts. Roblox is putting up some stunning numbers. Again, it'd be easy for the Wall Street Bets crew to sop up a couple of days worth of stock, take it to 90, take it to 110 practically overnight, then write all about it and say, I hate Cramer. He said to sell Roblox, and we bought it. That way they get everything, their whole zeitgeist, and then they're even happy because they can trash me. And I like that because I'm from Philadelphia. Honestly, the craziest thing about the Wall Street Bets crowd is that they don't know their own strength. Maybe they're worried that they don't have enough ammo to take on more than 2 stocks. I think they're wrong. I think they're selling themselves short. Here's the bottom line. Anyone shorting AMC or GameStop is out of their mind. Anyone selling, just walk away and watch how high they can take it. Wall Street Bets is too powerful, and trying to bet against them right now is just giving them more ammo. I'm just surprised they don't apply the same playbook to the Cramer Wall Street Bet faves, to the man, diamond hands, emoji, 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 Beyond Meat, Ford, Roblox. How's that? That's why I went to Harvard and Harvard Law, to get stupid. Charlie in New York. Charlie.
Booyah, Jimmy Chill.
Booyah!
Thanks for taking my call, man.
No problem.
First and foremost, I want to give a big shout out to my dad, Charlie Jr. He got me started with investing not so long ago. With the help of Jimmy Chill, we've done fairly well for ourselves. So
that's what I want to hear. That's what I want to hear. I like that. And walk away from GameStop, man. They want that thing at 400. Let's give them their due.
Jim, my question's about an airline stock. This stock has taken off since you suggested it back in January as a reopening play. How much more room on the runway does Southwest Airlines got, and do you still love it as a buy?
I love it. I love it even more. I LUV it, which happens to be the stock symbol. It's at 61. I think it goes to 75. You know, look, this is Gary Kelly. He knows how to run an airline, even when everyone's running out of business. He'd be the man to back, and I say back him. All right, listen to me, Wall Street Bets crowd. I know you love me, and I feel the same, obviously, right? And I'm just surprised you're not targeting Beyond Meat. Oh, come on, 22% short. Come on, you're salivating. Or do you really have to have GMO in your meat? Ford Motor. Hey, you know what? Got the momentum going against Musk. Good narrative there. Roblox. I know you probably don't like games that are safe, but a lot of parents do. Oh, man, buddy, tonight, it's a big day for Oh, I take that back. I didn't mean it. And I'm covering all the bases here. First up, I'm sitting down with the CEO of Workday to find out what's working in its most recent quarter. Then I'm talking all the things identity with the CEO of Okta and dissecting its high-octane report. And a blizzard in May, I'm talking with the CEO of Snowflake to find out more about the quarter. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com. On Tech Check, a CNBC...